So speaking of that, we want to dig a little bit more into the miners beyond just the precious metal itself. Miners are catching a pretty big bid here. So could this be the golden opportunity for your money, this way to play? So let's go to the charts. Chris, head over to that plasma. Break it down for us. Show us what we should be looking at.
You know, I think one of the big stories, and Tim hit on this, is gold's strength predates before we knew about this virus. I also think gold has been going up as the dollar has gone up as well. So gold has diverged from the typical relationship we see from USD. I would rather be a buyer of gold than I would dollars here. Here's gold over the last several years. The big breakout for us came above this 1,400 level late last year. It had been resistance for the better part of the last 3 years. So we're clearly through that. So let's put this in some historical context. There's nothing in front of us. Where can we go? Well, if we take a little step back and just look at gold, really over the last 30 years, you see really two big up moves. You had this big base that we started to form in the late 90s, big rally that followed, peaked at about 1950 in 2011. And then we've had this big base and this rally. Gold trades 1610 today, 1950 is the next major level. I suspect that's ultimately where this is headed. And if you look at what also may catch up here, it's silver. Silver has not broken out yet. I think if you're looking for more beta, this is another way to play it. Starting to base, you start to get gold and silver working together. I think it's very reflective that there's more to go for this precious metal move. Our favorite stock, Guy talks about it as well, Newmont. This is a major breakout. This is a 5-year breakout. The stock's been in a base for the better part of the last 3 years, finally getting up through 40, challenging 45. I think 60 is the target here. You go all the way back to where it was in 2011, traded as high as 75. So there's some major breakouts going on with the gold stocks. Newmont is an example. I suspect silver will get involved here as well. But gold, in context of history, look at those 2011 highs near that 1900, 1950 level, I think is the longer-term target of where this can go.
Good stuff. Chris, come on back. I want to toss it around the desk. Guy, what do you think? Newmont at 60, does that feel like a level that feels good?
So off camera, Tim and I were talking to each other. No, because we do this.
Yes.
Because I want to tee Guy up. One of the best guests we've had on this show over the time of the 13 years we've been doing this show is one Louise Yamada.
And she says...
who says, Guy, I'm teeing you up, please.
Well, she says the longer the base, or the larger the base, the longer... Yeah.
The bigger
the space. Very spinal tappy type thing without getting into great detail, Courtney. But to answer your question, I agree 100%. And I'll give you another. To Tim's level in the GDX, here's your line in the sand. You close above 32 in that sucker, and it's off to the races for all these miners. That's your bogey, and it closed today, I think, at 30.65.
All right, BK, what do you think of gold? And then I want to get your take on silver, too.
Yeah, well,
we haven't gone there yet.
So I bought silver today. So
okay.
that tells you what I think about it. I think it actually can catch up. And I think the key point is what Chris made. These metals, and gold in particular, have done this with a strong dollar. So imagine if you get any weakness in the dollar, what's going to happen to these things? So you've taken that kind of, strong dollar is bad for gold out of the equation for this trade. And to me, I think, gold higher, silver makes that catch up, and silver's kind of a fun one to trade because it's extremely volatile.
Is gold going to go as high as 1950 ultimately, as Chris says?
Sure, yeah. I think it breaks out above that. I mean, not tomorrow, but
not tomorrow.
I think very soon.
And the other part of this, so I think there's unanimity, great work by Chris, but if you look at other miners and if you look at other, reflation trades, and again, we're not really talking about gold as a reflation trade, but the charts on a Rio Tinto or a BHP Billiton don't look so good. Freeport Mac, look at the steel companies. They're all trading on the economic macro kind of malaise that people are fearful of and is where the bond yields are going. So just to be clear, not all miners are created equal. Gold miners who operationally, I think, are better than they've used to be, and that's a bottom-up story. We're all talking about that top-down breakout level.
Is it possible gold is telling us at some point in the future inflation will be a problem? Remember, gold started to turn in the late 90s, 97, 98, 99, before any of us could even imagine what oil and commodities would do over the next decade. I'm just very curious if gold is telling us that the future is going to look a little bit different than the last number of years. Maybe there is a cost to low bond yields for the last 10 years. I think that's the message from gold here.
Got it. Chris, thanks. Good work on all those charts.